So what if you could perfectly align your personal faith with your financial success? And I mean right here on the Pakistan Stock Exchange. It's a really powerful idea, right? But a lot of people assume that means you have to sacrifice returns. Well, today we're going to dig into the data and a powerful investment philosophy that shows the exact opposite might actually be true. Let's dive in.
Okay, just look at this chart for a second. That red line, that's the KMI 30, Pakistan's index of top Shariah-compliant companies. And the blue one is the conventional KSE 30. Now, over an entire decade, we're talking 2009 all the way to 2020, the Islamic index didn't just keep up. No, it completely left its conventional counterpart in the dust. And listen, this isn't some short-term blip. This is a powerful decade-long trend that you just can't ignore.
Now, a daily return difference of 0.036%. That might sound tiny, right? Almost insignificant. But this is where the magic of compounding happens. Over that 11-year period, the average daily return of the Islamic index was more than double the conventional one. Think about that. When you compound that small edge over thousands of trading days, it creates a massive, massive gap in total returns. The data is crystal clear. In Pakistan, faith-based investing hasn't been a handicap, it's actually been a proven source of superior performance.
Okay, so if Sharia-compliant stocks perform so well, how can we make our selection process even smarter? You see, the current system is a fantastic starting point, but it's got a fundamental limitation. It kind of gives us a simple yes or no, when the reality, well, it's a lot more nuanced than that.
Here's the thing about that compliant label. It's an all-or-nothing system. A company is either in or it's out. There's really no room for any nuance. And what that means is that a company that is almost perfectly aligned with Sharia principles gets treated exactly the same as one that just barely scrapes by the screening criteria.
So this really lays out the problem and the solution. The current system, it's like a simple on-off switch. It's a bit of a blunt instrument. But the proposed enhancement, the Sharia Compliance Degree, or SCD, is so much smarter. It's more like a dimmer switch or a speedometer. Instead of just a yes or no, the SCD gives you a specific percentage score. We're moving from a black and white view to a full spectrum of compliance. And that gives you, the investor, the power to make much more informed choices.
So, what is the Sharia Compliance Degree exactly? Well, think of it as a new metric that actually measures and assigns a score by looking at things like a company's debt levels and where its income is coming from. It's a simple but absolutely brilliant idea that transforms the screening process from a basic pass-fail test into a detailed report card for every company.
And this table? Wow, this just perfectly illustrates the power of the SCD. So look, all 4 of these companies are officially listed as compliant. But with the SCD, a much, much clearer picture emerges. You've got Mizan Bank and Islamic Bank scoring a perfect 100%. Makes sense. Mari Petroleum is way up there at 94%. But then look at Engr and Hub Power. They're also compliant, but with scores of 46% and 37%. An investor can now see this huge difference in alignment that was completely hidden before.
So the SCD gives us this incredible tool to measure faith alignment. But a high score alone doesn't guarantee a great investment. It tells us what is permissible, but it doesn't tell us what is wise. To bridge that gap, we need another layer of thinking. And for that, we're going to turn to the wisdom of one of history's greatest investors, the legendary Charlie Munger.
I just love this quote because it makes genius feel achievable. Munger, who was Warren Buffett's longtime partner, didn't chalk up his incredible success to some kind of once-in-a-generation intellect. Nope. He credited it to mental models, or as he playfully called them, tricks. These are just simple, powerful ways of thinking that cut through all the noise and lead to way better decisions.
And this is where it all comes together. This is where our 2 strategies combine into one really powerful process. Think of it this way. The Sharia screening is your first big filter, a negative screen that removes all the companies you have to avoid. Then, Munger's wisdom provides the positive screen. It's like a magnifying glass to find the real gems within that pre-approved Sharia-compliant universe.
Munger's positive screen can really be boiled down to these 4 essential filters. First, only invest in a business you can genuinely understand. If you can't explain it to a 10-year-old, stay away. Second, does the company have a durable competitive advantage, what he called a moat, that protects it from competitors? Third, is the management team both capable and trustworthy? You have to look at their track record. And finally, the cornerstone of it all. Are you buying it for far less than it's actually worth? That gap between the price and the real value, that's your margin of safety. It's your built-in protection against being wrong.
Now, of all of Munger's mental tricks, this next one, it's probably the most powerful.
It's the idea of inversion. It's a really simple shift in perspective that can radically improve your investment outcomes because it forces you to focus first on avoiding stupid mistakes.
This is it. This is the big idea. See, most people are always asking, how do I succeed? How can I find the next big winner? Munger's trick is to just flip the question completely on its head. Ask yourself, what would I have to do to absolutely positively guarantee I go broke in the market? By clearly identifying all the paths to ruin, you know exactly what you need to avoid.
And when you flip that question, the path to ruin becomes painfully obvious, doesn't it? You'd chase rumors and hot tips, you'd invest your rent money, you'd sell everything in a panic when the market tips, you'd ignore costs, put all your eggs in one basket, and you'd buy into complex businesses you don't understand at all. The insight here is so profound. By simply avoiding these common wealth-destroying behaviors, you automatically put yourself way ahead of the average investor. You win simply by not losing.
Okay, so let's bring all of this home. We've looked at the outperformance of Shariah stocks, we've found a better way to measure compliance with the SCD, and we've borrowed the timeless wisdom of Charlie Munger. Now let's forge all of that into a single, practical checklist for investing on the Pakistan Stock Exchange.
Here it is, your 4-step process. Super simple. First, you start with the official universe of Shariah-compliant stocks. That's your foundation. Second, you apply Munger's 4 filters to that list to weed out the average and find the truly excellent businesses. Third, you have to be patient. You wait for those times of market fear or pessimism because that's what creates opportunities to buy those great companies. And finally, step 4, you only pull the trigger when the price is significantly below your estimate of its true value. You have to demand that discount.
So we'll leave you with this final thought. You know, the constant noise of the market is always screaming, buy this, what's the next hot stock? But the foundation of both Shariah compliance and Munger's wisdom is built on a totally different question. It starts not with the frantic pursuit of gain, but with the careful avoidance of harm, both financial and ethical. And maybe, just maybe, that simple inversion is the smartest trick of all.